Good morning, everyone. This is Srikant Rajan. Welcome to the Stock Market Podcast from MPIinvest.com, the only platform where you learn to invest and trade in the stock market, plan your financial goals, invest in different financial assets, and grow with a community of knowledgeable investors. If you're not a part of the community yet, visit our website MPIinvest.com to join the community free of cost. Now, coming to the market, Nifty did see a rise on Friday. In fact, it closed at 16,260, which was above 16,000 as well as 16,250 levels. But then after that, there has been crazy moves happening across the globe. So if you look at the US market did fall. They tried to recover by end of the day. As discussed yesterday in the evening, we are seeing a major major risk of recession in US especially, and global markets like UK also is facing this major risk. So with all this, the negativity in the market is still there. It is only that the investor trying to find out some positivity some part of the world. So that's the only thing that we are looking out for, but otherwise there is no reason for the market to go up actually. So as today, if you see, I was looking at the SGX Nifty in the morning. I could see the Nifty was at SGX Nifty was at almost 16,340. So I was like wondering, oh, we would have a gap up opening today, but no, things changed. By the time I am actually making this report, I actually see the SGX Nifty falling down and settling down almost 20 points lower than the close on Friday. So that means we could have a flat to even a small gap down opening. In fact, of course, of late, Nifty has not been, kind of following SGX Nifty because the opening many a times has been different. But still, let us see how market reacts. So this is a time where we don't have a clear direction to the market right now until the Nifty actually closes above 16,400, after which probably we could see some bullish sign, or until the Nifty closes strongly below 15,650. So these are two major levels, I would say. That, of course, the range is too big, I understand, but this is the kind of range we could expect in this kind of market with such volatility, especially like I told you yesterday, this week being the monthly expiry of the derivatives. We would also see major volatility in the next few days. So be prepared for that. So along with that, we do have some good news from India. For example, in the last weekend after the market closed, Centre has cut the excise duty on petrol and diesel. In fact, petrol would be now cheaper by 8 rupees per litre and diesel would be cheaper by 6 rupees per litre. Of course, the intention is to reduce inflation. So things can be good for the market that way. The entire inflation may kind of reduce slightly next month. That is what we can expect. But for an economy like India, cutting down so much excess duty, that is 8 rupees per litre of petrol and 6 rupees per litre of diesel, is going to hit the revenue to the government by a big margin. Now there are a lot of expense that as a government also that has for the country, right? So what would happen if so much price reduction happens? There are chances that the government would have to borrow this money from somewhere, or there are chances that they'll have to manage it by hiking the taxes somewhere else. So these are all things which are not really good. So if you see, just for example, when this cut was done, the government has also cut the input charge, the products which are going to be imported for steel production, like choking coal and all that. But then along with that, they increase the export duty on iron ore by up to 50%. Yes. So that is something which is going to happen. Either they need to compensate this reduction somewhere else, or they lose out on this money and they'll have to borrow this money. So which is not really good for an economy. So this is not a great news, not a great positive news for the market, I would say. The positive news, of course, would be only when the crude oil prices actually goes down in the global market. So yesterday I told you, right now the crude oil price is trading around $110 a barrel, which of course is one of a higher side. So these are things which should be focused on. Of course, the input raw materials import duty has been waived off. That's a great news for the steel industry. But again, export duty going up on iron ore by 50% is not a great news. So these are things that needs to be seen today, how the market would react to all these news. And so we would be actually having a major focus on the FMCG industry, because they have this fuel rate hike, reduction, and which will actually reduce their inflation. But along with that, we would see some negativity or positivity in the steel stocks because of these two news, which can be confusing right now. So let us see how things market reacts there. Apart from that, if you look at some stock specific news, like I told you, Infosys has reappointed Salil Parekh as the CEO and MD for the next 5 years. So that's something good news, because he's been instrumental in turning around the company big time the last decade. So apart from that, we could also see Jet Airways. So Jet Airways is back in news. So they have finally got air operator certificate from DGCA, and they are probably planning the commercial flight operations in July to September quarter. So that would be in focus. Of course, we could see that going up. But is it time to invest? Only for risk takers, I would say you can go in for that. Otherwise, you really don't have to get into such a stock. Apart from that, coming to some major results that came in during the weekend, NTPC reported a 14% growth in consolidated net profit, and the revenue also rose by almost 23%. So that's something good. Let us see how an NTPC reacts today. In fact, we already have some investment there. Let us see how the market reacts for that. Paytm is has recorded a loss of 762 crores, which is higher than the previous quarter. So the loss is actually widening in Paytm, but then they announced a joint venture firm, which will be Paytm General Insurance Limited, and this is actually going to work on in general insurance, and this actually is a great field. Like always I've been telling you, India is very nascent in the insurance sector, so there could be some good future prospect. So that can be seen as a good news. So losses widening is of course a bad news. And also, if you remember, last week I told you that in Paytm Mall there was an exit by Alibaba Group. So that has been taken over by Paytm. So that also is something that can be watched out. So let us see how Paytm is. In fact, if you see right now the chart of Paytm, Paytm has kind of had a very significant fall, and from there, has been more of a sideways movement right now. So this is something kind of looks like it is settling down unless there is another major fall. Otherwise, things are kind of looking kind of stable in Paytm side right now. Shree Cement reported a 5.6% rise in profit. Of course, cement industry has been giving out good profits in the recent past. So we could see some good movement in the cement stocks soon. Apart from that, also of course we already saw that in JK Lakshmi, isn't it? It rallied up by almost 17%. But apart from that, we also have Power Grid, which came up with a great profit. In fact, the net profit came in at 4,156 crores, which was higher than the market expectation of 3,972 crores. So that's something good, but the revenue has come down slightly below expectation. But that's still a favorite stock of ours, and we will look at investing at every dip that happens. Coming to Cochin Shipyard, they also have seen their net profit rise by almost 16% year on year. So that's something good. The revenue was also up 12.2%. Now coming to some news from Shobha Developers, they also have reported almost 40% growth in net profit in the March quarter. So that's something good. Revenue also has grown by 30%. So that all these signs shows that the real estate sector is also coming up well, right? So these are all stocks that could actually, in our watch list. I will let you know, of course, when I add in the community. Apart from that, coming to a small negative news, Amar Raja results have come, and the profit has actually nosedived by 48%. Yes, it is down by 48%. Things are not looking good there. So, it's time that if we are still invested, probably it's time you exit out of it, because I don't see a reason why we should stay invested until things are kind of recovering. So, the revenue has of course risen by almost 4%, but 48% net profit down. There is something going internally. So probably it is better to kind of stay away from this for right now. So this is how the market is looking at right now. If you see, 16,000 would be of course the support, which I told you has become weak. Now we cannot call 16,000 as a major support, but of course it is a good support. But below that, 15,650 will be the major support which we need to look forward for. And on the higher side, the resistance is seen at 16,400. So until 16,400 is broken, I will not turn bullish on the market again. So till then, I will have more of a bearish view on the market. The major focus, of course, would be on the FII selling. So if FII again go on to sell more, there are chances the market can fall further. But apart from that, global markets, of course, would be in focus. So like I told you, there is a FOMC meeting that's going to happen in US, and the details of which would come out on Wednesday evening. So Thursday can be like really a very volatile day. So let us know more about it. But one important thing is, with all these things in place, it is great that in MPI family we are all making great profits. So how are we doing that? Is just by staying consistently invested. So be consistent, stay invested, and we will reap profits for sure. Before we leave, do press the like button and share this with your friends to help them learn and invest together with us. And we will discuss more about the day's market at the end of the day in the evening market podcast. So till then, this is Srikant Rajan signing off. Goodbye. Have a profitable day.